Radio.
What's going on, everybody? For Crypto Current, I'm Stephen Miller, and you are watching The Aftershock, our weekly show where we break down all of the latest and greatest from the world of Web3. Of course, I am joined by my co-host, Richard Carthon. Richard, how are you doing?
What's up, everybody? Doing well. For all those who aren't in the U.S. and also don't care about college football, I have to say I'm really excited because my alma mater, not only did they win their conference championship, they were heading to the Cotton Bowl to play USC. I'm very pumped up about that. This isn't a sports show, but I can't not talk about that for at least 2 seconds. As it relates to crypto, it's been yet another interesting week. Things are starting to stabilize a little bit. Bitcoin is not really pressing past 17.2, which isn't a good indicator. Looks like there is a lot of selling pressure around that area, which means we could be pushing a little bit lower before we begin to push higher. So not feeling great about that, but it is December. We're at the end of the year. So I think December is really going to set the tone for what we're going to be looking into heading into 2023. But how about yourself? How you doing?
You know, it's really funny that you bring it up because my alma mater also went to their AAC championship game and won outright over this god-awful team called the UCF Golden Knights this past week. And they're also going on to the Cotton Bowl. Oh, wait, that's both of our alma mater. I don't really care that this is a crypto show, man. Like, I'm stoked. Like, that was it was such a good game. Huge shout out if he's ever going to, watch the show to the running back for Tulane. Absolutely crushed it. I think it was over 150 yards from scrimmage, like 3 touchdowns. Like, I mean, he was just absolutely crushing it. So huge shout out there. The team did great. Willie Fritz brought home a championship, which I never thought I'd see the day, man. No disrespect. I know you played for the team, but I never thought I'd see the day. It's an exciting time to be a Green Wave alumnus, that's for sure.
It is. 22 years later, here we are.
Yep, 22 years later, but you know what? We're going to keep it pushing here into the crypto world. For those of you that did not come here to listen to a college football show, we're here to break down everything going on in the world of Web3 for you across the past week, give you a quick recap, and also give you some perspective on what to look forward to. This is The Aftershock. Let's dive in.
The Aftershock.
At the top of the Aftershock this week, we've got a lot of big stories, but none bigger than the fact that BlockFi has officially filed for bankruptcy. Now, this is just the latest in the crypto contagion effect. They've basically, announced in their bankruptcy filing that they owe $1.3 billion to their 50 largest creditors, and they have over 100,000 total creditors. That's kind of wild to think about at, the jump, but let's dive a little bit deeper, shall we? They also owe $30 million to the United States SEC and are suing FTX for $680 million in damages as of right now. Now, this, of course, is a company that FTX had substantial investment in. It is, one of the companies that's going to be most affected by the FTX fallout. Richard, what do you think of all of this development that we've had over the BlockFi story in the last week?
It's sad. It's, a company that, again, previously we had on the show and, previously I personally had a lot of faith in, and how they got to this point where they got over leveraged, unfortunately, and really weren't taking care of the funds that they got in and didn't necessarily fully disclose to people as they were first getting into the space of what were to happen to their funds if they ever were to go bankrupt. I know we got into it once Coinbase formally announced that, hey, this is what happens when this happens. And then we came on the show and explained, hey, this can happen with BlockFi, can happen with a bunch of these others. But people just like in FTX are going on to lose a substantial amount of money in a place where they thought was safe and unfortunately wasn't. And not only is this affecting those people, it's also hurting reputation and hurting a lot of other players in the space that were trying to do it right. I mean, they got fined by the SEC. That's probably the rest of the money that they still owe them. Earlier this year, they got fined for not doing things in a necessarily regulatory way. And they were trying to be compliant. They were trying to do the right things, but now they got caught up. And here's just another blemish in the world of crypto that now has to be an example. So this This sucks. We've been talking about this for weeks, ever since the FTX fallout happened, that this was going to happen. It's officially happened, and it doesn't make it any better. It sucks.
Yeah, there's no two ways to spin this one. It really does suck. They seem like a very promising platform. I'm sure that there's still many individuals who are, dealing with having their funds wrapped up in the platform right now. I believe all withdrawals have been halted. So for those of you at home that may be dealing with this, our hearts go out to you. We are really sorry to hear, about this filing, but this is just the next chip to fall. We talked about it a couple of weeks ago when, we were talking about what, the next shoe to drop could be, right? But this is in fact one that we did expect. So it's unfortunate, but let's keep it pushing into our next story, move a little bit down the line into some other relevant news. This is one that I am really, really like both surprised and extremely disappointed by. We've been talking about it for probably the better part of 2 years now, that like it was an inevitability for when Apple was going to make the move into crypto or into Web3 in some type of substantial way. This is not what I had in mind. So a couple of weeks back, we talked about a new App Store policy that essentially said that it's going to charge a 30% fee on every single crypto-based transaction or NFT-related transfer. And it's gotten to the point now that Apple has forced the Coinbase wallet to disable NFT transfers. Why? Well, because of this recent App Store change in policy. So they're saying that all Ethereum-based iOS trades and transfers, this means if it's even just a peer-to-peer wallet transfer, has to be taxed. So that goes on to the gas fee. So if I'm trying to transfer an NFT to you, Richard, Apple is saying that if I'm doing that from a MetaMask wallet or a Coinbase wallet on iOS, that I am supposed to be paying 30% in premium of whatever that gas fee is to the network back to Apple. It's an absolutely egregious, tax that they're putting into place. And you've had people like one of the co-founders of MetaMask coming out to say that it's borderline abuse. What do you think about this recent development and what it could do to all of our fellow iOS-based users in the crypto world?
It's going back to the bully tactics that Apple's been implementing for years. They've been disrupting a lot of money and cash flow and pissing off a lot of big tech. You see companies like Facebook and Twitter whose bottom lines have been absolutely decimated by the opt-outs that Apple's implemented. Oh, by the way, anyone who builds in the App Store, you have to pay 30% of all profits that come through. It's a monopoly. And a lot of big tech has been really trying to push this and get something going. But the real difference with this is that fundamentally what they are requesting cannot happen. They would basically, all these blockchains would have to go and build a system to then tag this on with that. And it's just not worth it at that point. And so what Apple's either going to do is basically have the entire crypto community not be on iPhone and Apple devices, which sucks, because what stops them to do it from the App Store, right? So what if all of a sudden all Mac users who use a MetaMask are now saying because this is from or on an Apple device, now we need to start, putting 30% on top of that. People, it's insane. And good luck. I think there's going to be a lot of pushback on this. It's going to be hard for Apple to really have this come through, but I think it's also opening the door for more outrage and for more people to get so upset about this that something is actually done about this whole 30% tax that they've been charging for years.
So the good news is, underneath it all, there have been a lot of backroom chats apparently taking place. I don't have the ability to share an explicit source, but there are conversations that have been happening with Tim Cook behind the scenes. And I believe that from what I've heard on a couple of different conversations that Elon Musk has been a part of in the last couple of months and even weeks, that he is trying to influence crypto policy over at Apple as well. So if you want to have hope at home, understand that there are conversations. This is an actively developing story. And there is a chance that we may see some reversal here in the near future. I think it would be just downright irresponsible of Apple to keep this policy in place, especially when there is no way for them to actually control it. The only way they can control it is by banning NFTs. to be able to do transfers, from one wallet to another, whether it's on Ethereum, Solana, Polygon, all of them incur a gas fee. They all do. So for there to be some type of requirement in place that would require the user to pay that premium on any transfer to Apple is just unreasonable. So my hope is that we start to see a reversal on this soon, but it could be a detriment that stretches all the way to Mac users, as you said, right? We all use, for the most part, MetaMask through a browser. What's to stop Apple from saying that you can no longer use wallet-based extensions that are built into your browser, right? It's a very, very slippery slope. And my hope is that we start to see a resolution on it soon. So here's hoping that Brian Armstrong, can use a little bit of that power and influence to talk to Tim Cook and get some sense into Apple. Let's talk about this next one. This is something that has been a very, very constant narrative across the last 2 months. There have been a lot of layoffs in crypto. Meta, laid off, I believe it was something to the tune of 30% or 50% of its workforce. You had Twitter laying off, I believe they got up to 50% of their workforce. Kraken has just announced that they have laid off 30% of its staff, which equates to roughly 1,100 employees. And Bybit has cut about 30% of its staff. We like to talk a lot here about how the bear market is for building. What do you have to say to these individuals and to the rest of the market that may be looking for work right now? Is this a sign that there may be a tapering in terms of opportunity, or is this another opportunity for others to be coming into these, firms that may be looking for more help?
So we're in this interesting place where typically when you see a lot of job cuts and everything else, you typically see a falling economy. Now, in the world of crypto, yes, it's a tough world out there right now. But in the greater world landscape, especially in the United States, there's been a lot of jobs being added, even though there are things being put in place to try to stifle growth. Now, as it relates to opportunities that are within the Web3 space, I would say those are probably more challenging because you have a lot more talent coming into the pool for a minimal amount of positions that are open. However, it doesn't mean that you can't be in a Web 2.5 adjacent opportunity where they're not directly into Web3 yet, but they're trying to make that transition into it, where you can come in and provide your services there and work on the side within like a DAO or some project that you feel passionate about. So I think there's still going to be a lot of opportunities there. I will say that as you look for opportunities directly into the Web3 space, it is definitely more challenging at this moment because you have a ton of talent all at once looking for less positions.
Yeah, it's going to be a very tricky market going forward, but I do want to give a quick vote of reassurance to those that have been laid off. There are going to be more opportunities coming up. Do not lose hope. There are plenty of people out there that are currently looking for work. There are new job listings that come up every single day. Just because certain firms are having to scale back, it's honestly more statement to the fact that they had poor planning going into the bear. This is your opportunity to go out and figure out what firms have recently raised capital, go through different job searching utilities. Don't see it as, a net negative. This is how we start to see talent get redistributed across the entirety of Web3. So that would be my hope for those at home. But let's jump into our next story. This is a really good one, in my opinion. You have Stripe, which is one of the largest payment service providers and payment gateways out in the corporate world and B2B solutions, and even for e-commerce solutions out there. They have officially launched a Fiat-to-Crypto payment onboarding service. So they are now, allowing for different Web3 customers to have an on-ramp so they can on-ramp fiat into the crypto native world. It's a huge step. Frankly, they're very well known for being a credit card service provider and allowing, name an e-commerce provider the ability to take payment from its customers. This gives an opportunity not only for those customers to be paying in crypto, but it also allows for those businesses to off-ramp to fiat. So I'm really bullish on this story. Is there any other bigger takeaway, or is this one pretty straight up on the face?
No, it's pretty straightforward, but really cool that if you're one of those people are companies who's getting paid in fiat, and you're like, man, I really wish I could just be stacking sats or collecting Ethereum or whatever it was. And looks like now you have that option. I know a lot of companies that go through Stripe. So for Web3, I think this is a big win.
Yeah, the one thing that I would be curious about here is like the way they've deployed it is that of kind of like a widget where they can, allow their customers to kind of customize the way they want this portal to work. Do you see this as a new competitor of sorts to a platform like MoonPay?
Yes. I think they've been observing these companies and realizing the opportunity that's within them because it provides another access point for a specific type of user, and then another way to get another type of transaction on top of it. How do you have people who come and spend money on your platform spend more money? Now, if they're coming in and you're getting fiat, that's probably one way that they're going to get their money. But then if you want to then convert it, they're probably going to charge you again. So again, they're just figuring out like, how do we keep upselling your users? And this is one way that they can potentially do that.
Yeah, look, I'm really excited about this one because I know that more and more businesses are looking for on-ramps right now. And for them to be coming on the scene, it's really starting to further differentiate them from the likes of PayPal, which is their, other primary competitor. So I'm bullish on this story. I think it's a big time difference maker for Web3 companies and companies that are trying to move into Web3. So I'm bullish, really excited about that story. This one's an interesting one. We've heard a lot from Telegram's CEO across the last couple of years about their, attempts to move into the crypto world. Well, their CEOs announced they're planning on building out a crypto wallet, and not only a wallet, but a decentralized exchange. How do you feel about this story? Because I know that there are other chat platforms out there that Telegram competes with directly. And I believe that the leading one is WeChat out of China. A lot of these different chat apps are trying to be a catch-all. They're trying to do all sorts of different things, kind of be an app killer. What do you think of this? Is this Telegram's path to being that type of a disruptor, or is this just something that Telegram is going to use to differentiate itself from its competitors?
I think it's a differentiator, but my mind first goes to scams. Like the amount of scams that already happen in the world of Telegram is pretty remarkable. But now you add a layer where like, oh, now a scammer can go in and then use my crypto wallet, then also use a DEX to then drain me all in like 3 seconds. That sounds pretty alarming. I think that if they go this route, they're going to have to absolutely up their security, beef it up, and figure out ways to make their platform more secure. Because that's just my immediate red flag of like, man, that just sounds like a disaster. If someone were to go all in on Telegram and use all of their services and then somehow got scammed, aka like SIM swapped, or someone gets access to their computer that's also linked to their Telegram, and now they have access to all the keys to the kingdom, that just scares me.
Yeah, be advised. Like, this is also a strategy that Elon is apparently working on over at Twitter. And Twitter is no stranger to their fair share of different crypto scams as well. So you never really know. It could end up being a major scam gateway. But for me, I think it's a really interesting opportunity. Will I trust it? I'm not sure yet. I'm starting more and more personally to get more trust in mind as it relates to different platforms like Signal, where you have a greater degree of end-to-end encryption. But I think that Telegram needs to continue to try and differentiate itself in the marketplace. And as long as they're not, falling to the example of becoming WeChat, which is also controlled by the Chinese government, like, you need to kind of have a little degree of hope there. At least that's as far as I will take it. In our final story in the Web3 lightning round today, I am very pleased to report that the Phantom wallet, which is Solana's #1 wallet, will officially add both Ethereum and Polygon support. Now, Richard, why is this story such a big deal, and why is it bringing such a smile to my face?
Oh, man, because you're such a fan of Solana. Solana has had a lot of challenges, and I think still has an uphill battle to fight. And how do these wallets and other things built on Solana make money? It's through having more transactions. And obviously, as Solana prices go down and projects potentially have less and less things being built during these bearish moments, they're not making as much money. So they're like, okay, well, how do we go find more money? And the answer apparently is ETH. So yeah, I think this was an inevitability. I think any wallet built on a specific platform will always start natively. And then once they realize they need to scale because they need to survive, they start adding others, and the others is typically ETH first.
Yeah, if there's any one thing that's worth taking away from this story is that they're finally realizing that if they only are going to count on the success of Solana, they have a very, very high risk of failure. I cannot say it enough. Like, I think that Solana's like in real deep trouble. There was a very, very big part of the token distribution that was released right around the same time as FTX collapse. And FTX was also a major investor in Solana. So there's a lot of reasons beyond just the technology for there to be concern here. And I think this is their way of hedging their bets, reasonably so, at all honesty. So I look right now to a lot of these other platforms out there and different Web3 ecosystems that are taking off as bigger opportunities. And I hope, honestly, that more of these wallets decide to make progressive moves to support them. The big one I have in mind right now is Algorand. Algorand has had nothing but positive news in this current market cycle. They're a fairly decentralized platform, and they're continuing to push the boundaries of what is possible in Web3. So if I see a Phantom or I see a MetaMask start to support Algorand's AVM, I'm going to be very excited. But I think that people should be skeptical, to say the least, about Solana's future. And this is, of course, a big indicator of that over at Phantom. Let's jump into last week in the metaverse. And in metaverse and NFT related news, we've got a pretty interesting top story. And that is that a Chinese court has just ruled that NFTs are virtual property protected by law. Now, if China has taught us anything, Richard, it's that China can quickly reverse on any decision it makes.
Yeah.
Why are you bullish on this story? And do you think that it's going to actually have staying power?
I think that as it relates to NFTs, they see the use cases of traceability and value that they can eventually rip right back if they have to. And because of that, they see that as a new form way of saying like property, because a lot of people in China don't necessarily own a lot of property. So now they can be like, oh, we're for the people. Here's some property you can go own. But again, because it's traceable, because they can do all the proper things in place to track it all, it's a way that they can get right back to it. So it kind of aligns with, how things work over there. So they could reverse this, but I don't know why they would.
In China, the crypto policy changes like the seasons. You can almost count on the fact that there's going to be a development to this that is going to be more bearish in nature. But I think at the end of the day, this is something that's being put in place to placate more than it is to make technological progression. So we'll see where it really goes from here, but it's an interesting development nonetheless. Next up, we have Porsche opening up about its Web3 plans. They have announced at Art Basel this past week that they will be moving forward with a NFT art project that is specifically, going to be a dynamic NFT project. I'm very interested to see how this one develops. It goes specifically into artwork around the Porsche 911 design in its first iteration. I believe they're going to be releasing something to the tune of 7,777 of these, NFTs. And the artwork looks pretty sick. I will give them that. And it's all built in Unreal Engine 5, which is a graphics engine that is used primarily within AAA gaming. So there is a lot of potential here beyond art. You could theoretically see Porsche work on different partnerships to make these game ready and game usable. So I'm curious to see where this one goes. Is there anything else that interests you about the story?
Nothing to add other than they probably were collecting data around like what's working and what's not. They learned from Chevrolet, the Corvette, when they probably tried to roll their situation out and understand an actual car paired with a virtual, and what does that correlation look like. And they've also seen a Porsche sell for $1.3 million back in 2020. Shout out to the Miami crypto experience. Actually, that was 2021. So they know that there is an appetite for this. So I think overall, I think this is bullish news and an exciting announcement that came out of Art Basel.
Yeah, and definitely one of many exciting announcements that came out of Art Basel for sure. Next up, we've got news from Coinbase. Coinbase has announced that they're pausing their plans for the Bored Ape Yacht Club NFT short film trilogy that they were planning earlier on in the year. They were planning this just before NFT NYC, and they were going to debut the first, short film at NFT NYC. I heard that that did not go over as well as they had hoped, but as of right now, I'm assuming that it's a budgetary concern over at Coinbase that is making this something they need to put on the back burner. So sorry for any BASE fans out there. I'm pretty sure this will end up coming to fruition. I mean, they've got such a large war chest between Coinbase and Yuga Labs that it's almost inevitable to me. But let's go ahead and pass along on this one. Now on to a bigger story. Now, this is actually a huge story in the world of Web3 and in the metaverse. OpenSea has officially announced an integration with BNB chain, that is Binance. If you know much about the way that these Web3 ecosystems work, there are NFTs across a number of different chains at this point. But arguably, the top three for NFTs right at this immediate moment are Binance, Solana, and Ethereum. When you look outside of that, yes, there are two that are right on the outskirts of that, and that, of course, includes Polygon and Cardano. But OpenSea is already integrated with Solana, Ethereum, Polygon, and now Binance. This means that you can officially sell damn near any NFT on the OpenSea platform. It's a big deal that they're doing this. It's a big deal that they're moving this forward because it's going to add a ton of money to their bottom line. If OpenSea is able to collect fees on every single transaction across all of these networks for NFT listings, it's going to make a major difference. And it's going to allow them to command a much larger market share than they did prior, especially because Binance is such a powerhouse globally right now, if not them being a big player in the United States, because they're not necessarily a large player here. This gives OpenSea a much bigger market to expand to outside of the United States. So that's kind of my initial look at this. What do you find particularly interesting about this story?
OpenSea continues to do the right things to grow their market share to just be the dominant figure in this space, and allowing more of these chains that are having a lot of success to be on here. It's making more and more people want to go there to advertise where they make their sales. Of course, there's a lot of competitive NFT marketplaces that are out there that we've mentioned and will continue to mention into the future. But I think OpenSea has the right approach to try to get as many integrations as possible, which these are hard. Like, the reason that these take as long as they do is to set this up is a tremendous amount of technical debt. And I like right now that they're quadrupling down on building during this bearish times. Because when things get on the other side of this and things start getting bullish again and NFTs, now you can basically do all the things that you want on one platform. And that's powerful.
Yeah, I'm really encouraged by the fact that they're trying to broaden their horizons and allowing for different chains to set sail on OpenSea. Yes, I really did want to tee that up so I can make the anecdote, but at the same time, you're going to see a lot more. Like, OpenSea is not going to stop here. I imagine it's just a matter of time before you see integrations with chains that, like Algorand, like Cardano. I actually believe that they said in the last month that they were planning Tezos before the end of the year. And yeah. Tezos is one of the bigger chains as it relates to art right now. So I'm really, really excited to see a marketplace taking this aggressive of a stance on onboarding new chains, but it's also going to be kind of like shitty news for consumers because OpenSea has the highest fees of any marketplace that's out there right now.
By far.
And if they're going to continue to take on additional customers from new outside chains, it's just going to continue to add to their war chest. So think of it from the business perspective. If that's the case, and they're going to continue to build up this war chest, they're going to continue to add new chains, their competitors are inevitably going to have to raise their rates as well, right? The fees are going to have to go up for these other marketplaces because it's going to be the only way they get enough revenue in to be able to continue to compete. That's a really scary thing to look at. Do I think that it's inevitable that OpenSea wins out? No, I don't. I think there's going to be enough people within the Ethereum ecosystem, for one, that get really, really tired of having to pay a 2.5% fee on every transaction, that they're going to move over to different marketplaces and different aggregators, and they're eventually going to find more competitive deals. I just really don't know what it's going to take for people to really unilaterally get tired of it to a degree that OpenSea has to lower their fees.
Just to add on to that thought, in the short term, yes, I think they keep their fees high because they can charge the premium, and a lot of people aren't really willing to go visit some of these other places. But at the same time, once they get enough market share, when they get enough of these chains, they do all of these things. What happens when they do the opposite? What happens when they make their fees so cheap it doesn't make sense for you to go anywhere else? And I think that's the long-term plan that they have. Right now, they can afford to charge those fees, but what happens when they literally integrate to all the other players and they start seeing another one having a little bit of success, and then they cut their fees to either match or go lower, and then it's unprofitable for the business to even try to compete with OpenSea.
The other side of this is that you're also going to see more specialized exchanges come up. One of the best examples out there is within the world of ENS domains, and you now have specific specialized marketplaces that are built for just the NFTs that are domains, right? Your Web3 identities, your handles. The big marketplace over there is ENS Vision. You're going to see the same exact stuff happen with PFPs. You're going to have the same stuff start to pop up with art. And you may even start to see individual projects start to roll out their own proprietary marketplaces. They're going to be fee-free, right? There are a lot of different, moving parts to this that are going to eventually play a factor, right? They're absolutely going to play a part of the way that this market develops. But for OpenSea to start onboarding all of these chains and continue to maintain a lead out in front of all of the other marketplaces as it relates to cross-chain and multi-chain interoperability, they're going to have a leg up. It's inevitable. So it's a really interesting story to me. I think it brings up a lot of really good points. And for those of you at home that are interested in learning more about this, I really encourage you to go out and check out more marketplaces. Yeah, of course, you know about LooksRare at this point if you're in the NFT world. There's also X2Y2. There's Blur.io. There's Gem.xyz, which happens to now be owned by Coinbase. Not by Coinbase, owned now by OpenSea. But there's a lot of different opportunities out there. Don't lose sight of it. Yes, Coinbase NFT exists, but we're just going to let that be the joke in the background. Anyway, let's move into our final story. Let's get through the rest of this news and get you on to the rest of your week. Speaking of NFT marketplaces, Uniswap's NFT marketplace aggregator has officially launched with an airdrop for Prior-Genie users. This is such a big deal that I don't even have the ability to unpack it all mentally, which is crazy because we don't have a true NFT decentralized exchange. That's what this is. You finally have an NFT marketplace aggregator that will function in a decentralized way. And that is because earlier in the year, right back around NFT NYC, Uniswap had acquired Genie. Genie is just like Gem.xyz. It's just like Blur.io, but now it is integrated fully with Uniswap. So Uniswap is calling it essentially a Google search for NFT trading. Richard, what is your breakdown on this one? Do you think they're probably the leading competitor to somebody like an OpenSea right now, or one of the rising threats.
Oh, they're trying to be. I mean, they took an aggressive approach to make an acquisition to try to be competitive. And they have been making so much money. They have been making so much money over at Uniswap that their war chest is huge. And so they're like, okay, how do we prepare for the next wave? And the next wave that they missed on was NFTs. And they're like, oh, we're not going to miss this next one. We're going to be ready. And how do we do that? It's to give a tool to people who are in this space to be able to move quickly and get the best price. And they've basically been building that, and now it's ready to go. I don't know that it's going to be utilized as much as they were probably anticipating, because I don't think they were anticipating this big of a bear market. But I think that as people begin to use it, they get data and they continue to refine it over time. And if it has some success, it's going to be really hard to compete, because if they're able to aggregate and again get better fees than OpenSea, truly get the best price, they have a compelling argument.
Now, if you were a user of Genie prior to NFT NYC when this acquisition was announced, there is an airdrop for you. So if you do, have that track record, you want to check to see if your wallet has that track record, you can go up to Uniswap today and run a checker to see if you're eligible for the airdrop, and they will airdrop you $300 in USDC if you have a historical record of having used Genie prior to the acquisition. So pretty cool for you there. You get a little bit of cash in your pocket, and hopefully you'll be able to use that to go buy some NFTs on the Uniswap NFT marketplace. I'm really bullish on this more than anything else because it's an actual decentralized exchange. A lot of people contest that Uniswap is not exactly decentralized, but I do argue that it is. And I really do believe that if there is a hope for a decentralized future, the NFT marketplace at large needs an actual decentralized exchange for NFTs. So I have high hopes on this one, but I really do think that it's a cool development, and it's absolutely mind-blowing to see that they have made this all happen in under 6 months' time to truly integrate this into Uniswap. Like, I don't know many companies that have been able to truly create that integration / really interweave brand new acquired technology all inside of a year. I mean, have you seen that before or no?
This quickly? No, but usually you can't build as much and as fast as you want to when things are bullish, because you're just trying to make sure that nothing catches on fire, and if something breaks, to fix it as quickly as possible. Now, because they have time, they're building, and like to put all your effort and energy into something like this, it makes sense. And it's really cool just to see them have developed this as quickly as they did.
No question. Well, look, thank you guys so much for joining us for this week's Aftershock. If you enjoyed it, please make sure that you drop us a like over on YouTube, and make sure that you subscribe so you get all of our videos as they come out every single week, and leave us a comment. Let us know what you thought in general. Of course, over on YouTube and on our podcast platforms, wherever you get your favorite podcasts, we do these shows every Wednesday, as well as we release brand new interviews that Richard hosts every single Monday. Richard, who did you have the opportunity to sit down with this past Monday?
So this Monday I had Khalil Camden. He's the CEO of Digital Vision Media Group. And we got to talk about Web3 companies for growth, and what can you be doing during these bearish times, and how do you keep that community around and thriving? And there's some really cool nuggets that you can get out of it so that you can implement your own strategies for your own companies that you are involved with here in these in the Web3 space. So it was a really cool conversation, and definitely worth going and give a look.
Awesome. Well, look, for those of us here at Cryptocurrent wanting to make sure that we say it to you at home, thank you so much for tuning in. We hope to see you next time, and we hope that you look forward to the next episode of Cryptocurrent's Aftershock. Until then, stay cryptocurrent. We'll catch you later.
Thank you for joining us for another episode of Cryptocurrent. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. This show and any other Cryptocurrent production is exclusively for informational purposes.